Hi everyone and welcome to 3 Charts in 1 with me, Richard Perry, market analyst for Infinox on Friday the 8th of July. Again, 3 charts that I'm looking out for today, lots going on. We've got the cable chart, political upheaval in the UK, sterling moving around on that. We're also looking at the oil price, which has had significant volatility in recent days, and S&P futures, well, maybe a recovery going on, but we'll see. So let's have a look straight away at this sterling dollar chart, which has been recovering actually since the political sort of volatility that it surrounds the situation with Boris Johnson having to resign as the Conservative Party leader and now subsequently will leave as Prime Minister at some stage. And what we've seen is the markets have recovered actually on sterling dollar. Sterling has benefited from this move, and the technicals are actually still negative on cable, though, with this downtrend intact. But the recovery we have seen has now started to hit that downtrend and just sort of fall over a little bit this morning. We've got non-farm payrolls today as well, which will certainly be bringing the focus back on US dollar once more. And the US dollar has just started to strengthen a little bit this morning, but I mean, in recent times, we've seen any US data that surprises to the downside has been safe haven asset positive, which is positive for the dollar, and that would drag sterling dollar lower. So this rally within the downtrend probably is still a chance to sell, you'd think, because of what we do still have is this big overhead supply that, if I get the crosshair, big overhead supply that comes in around the 2160 mark. We haven't got there, but we're up to this downtrend. So if that downtrend gets broken, maybe you could see a recovery towards that 2160 mark. But at the moment, the recovery sort of falling at that downtrend. If payrolls does induce a dollar strength move, then I think we can see that sterling dollar is likely to fall away again. 19 big figure was the reaction, like 1875 to 19 big figure is the support. So that's what we're looking out for as a probable retest in due course if this bull failure at that downtrend kicks in. We've also got the momentum, which is unwound towards 40. Again, sort of selling opportunity levels probably there. Moving on to the oil chart, well, huge volatility in recent days, a massive sort of 10% decline, over 10% that we saw on was that Tuesday, and then a further downside on Wednesday that came back towards the bottom of this trend, this trading range. We've seen a trading range sort of 98 to 102 big figure as the basis of support consistently over the past few months, up towards the mid 120s, 124, 126 area as the resistance, but the fall back towards that support has found support again. So we are still trading this as a range. And if that is the case, then maybe you do still see another recovery within that, back towards maybe 50 on that RSI. I've drawn in a downtrend that links these lower highs. I mean, it's not a great downtrend, but you can see that this could be a downtrend that arguably becomes a downtrend channel. You can see that also the lower lows are being linked as well. So maybe that becomes a trend channel lower. And again, that is a recovery within that channel. So back towards maybe the midpoint of the range and that downtrend channel on a near-term basis as the RSI unwinds towards 50 is possible now. It's testing the initial basis of resistance from the overhead supply from this reaction low that was sort of 110 big figure area. If I get the 4-hour chart on it, you can see that that is the case here. I've got this resistance that starts to come in overhead. So that's the next barrier. If you can get through that, then you're looking back towards that that old downtrend again, and the resistance around the midpoint of the range. But yeah, a little bit of recovery in the oil price there. And finally, S&P 500 futures. Well, we have seen a recovery, and I've drawn in a tentative uptrend. And I say tentative because if you look on the 4-hour chart, it doesn't actually link the lows, but it's sort of there or thereabouts, and it is a recovery of higher lows. And it's back towards this overhead supply resistance area of the old gap and up towards this resistance around sort of 3950 area, 3,950. It's interesting to see if that starts to kick in as resistance, because consistently we've seen this downtrend in play, and that actually of lower highs throughout 2022. Really, anytime you see a technical rally, it pretty much fails and falls over. You've got the RSI back to 50 again, a point at which in recent months the the bull rallies have failed between sort of 50 and 55 on a consistent basis. This is around this resistance point. So this turns into a really important moment for S&P futures. A bull failure here, again, with the market turning over, would likely induce the selling pressure again, at least back towards that uptrend, but possibly back towards the lows again. So this resistance band that we've got on S&P 500 futures, I think is going to be crucial now. 38.90 area to 39.50, bull failure around that, and it looks like you're sort of turning lower again. So a recovery above that, and you're looking at testing the downtrend, but again, we're still seeing, I think, rallies as a chance to sell. So I wish you good luck in your trading today, and I'll speak to you soon. Thank you very much.